Brought to you by Tailored Wealth, helping business leaders live their version of a rich life.
Welcome to another edition of the Making Sense of Your Money podcast, where we cut through the financial noise and help business leaders to make smart, confident money decisions. Welcome to episode number 34 of the Making Sense of Your Money podcast. I'm your host, Dan Pascone. I'm the founder and CEO of Tailored Wealth. And each episode features a trusted voice in the financial world, bringing their expertise to help high achievers to confidently make sense of their money. And today I'm excited. We've got a great guest with us. We've got with us Karl Strube, who is the owner of Strube CPA. And Karl has a unique expertise, which I'm excited to unpack today, and that is taxation on equity compensation, which is something that many of our clients and our broader Making Sense of Your Money audience likes to learn about, sometimes struggles with. So I'm excited to unpack that a bit with Karl. So thanks for being on with us today, Karl. Appreciate having you.
Thanks for having me, Dan. I'm looking forward to our conversation.
Likewise, man. Likewise. All right. So I know there's a lot of stuff that we want to unpack here and a bunch of stuff we want to get into. If you don't mind, just give the audience a quick eye-level overview of what it is you do, a little bit of your background and how you got into this field.
Yeah. So first and foremost, it's always the personal stuff that feeds into our professional life. So I'm married to my lovely wife, Heidi. We have 3 awesome children. Nora is almost 8, William is 5, and Gloria is 1.5. So I am a CPA. I live in Fresno, California. I'm originally from Orange County. I moved here to go to college. I just set up life here and stayed. I love it here. So then career-wise, graduating college with an accounting degree, I started at Deloitte. I was in their audit practice for about 5 years. Then I moved over to private industry. I was a controller for a couple different agriculture companies for another 5 years or so. While I was at that second controller job, I started doing taxes on the side. And then life changes brought me to where I ended up leaving that controller job to grow my own firm. And that was back in 2017.
Okay.
And so when I started my firm, I was just a generalist. When you start a business, you take anybody that's breathing and gives you money.
Right.
And so, but over the last few years, I've started to specialize in equity comp. You brought that up, Dan. And, things, stock options, RSUs. Really, I found that that's where clients were needing real expert guidance. And it's where I was enjoying the work the most.
Nice.
There's so much strategy in that equity comp space in relation to our tax code. There's a lot of legal discretion and bandwidth about how we can prepare and plan in the tax side. And equity comp has a lot of tricky nuances. I think the biggest one is probably basis adjustments. I'm sure you've seen that, Dan.
I have.
And so those can easily be overlooked. And so by focusing, I feel like that helps present well to clients and prospects that I know what I'm doing. We can avoid costly mistakes. We can help them not overpay in their taxes. And we can maximize the value of their equity compensation.
I love it. I love it. That's well said, and I'm excited to unpack that a little bit more. So let's talk a little bit about the early days. So you're taking everybody on, you're starting to build your own tax practice. I imagine you just kind of randomly stumbled on a few people that had some stock options and you kind of figured out how to help them out. Like, what got you into this niche and helping to not only build your own expertise in equity compensation, but now make it the primary focus of your business?
So you're exactly right. There was one client that I got back in probably my second year of running my firm that worked for a publicly traded company.
Okay.
And had equity comp. And this is my first time seeing these forms, the 3921, the 3922 for ISOs and for ESPPs.
Right.
And so I want to make sure I'm preparing an accurate return. So I start digging into this and I realize, okay, there's more here. There's more here. This is not just punching numbers into the tax software blindly. And so that really forced me to dive in. I started buying some books. I started looking for and taking specific continuing ed courses, making sure that I was ensuring quality because, as I'm sure you know, Dan, there is a lot of rampant bad advice out on social media around tax. You want to be very careful who you're listening to. And so what I really found is all the work that I would do in order to get ready to put information into the tax software, I'm just playing in Excel more. And I'm total data nerd about just playing around in Excel, formulas, VLOOKUPs, sum ifs. and getting that comfort feel about the information we're ultimately going to put on a return. And then it expanded further to realize the tax planning capacity with this.
Right.
And just to be able to offer those services probably with even more ROI value for clients. And so to see the timing difference of when we choose to exercise these options, when we choose to sell these shares, can make some, 5 or 6 figure differences in their ultimate tax bill and their wealth building.
Yeah, it's interesting. I talk about this all the time when we're touching on the topic of equity compensation. In a nutshell, like what is equity compensation, right? Equity compensation is the firm compensating their employees with their own stock and typically using it as a tool to attract talent and retain talent, which in and of itself, very, very noble mission, right? I love that mission. I'm a former corporate executive. I had equity comp in my prior life. So I know the value of what the company can provide to its employees. And it's also a great motivator, right? It's a great way to motivate you to help produce results for the company. So if you just look at like the intrinsic value of it, I love the concept of equity comp. Now, the bad side of equity comp, highly, highly complex, right? Highly complex. And most of the time, the individuals that are receiving it don't have a great expertise when it comes to tax and financial planning. I had another podcast guest on, and he said at a prior firm he was at, he was watching these high level doctors, just like extremely bright individuals that had no idea how to manage what is a significant portion of their compensation package. So let's start to unpack that a little bit, Karl. What are the biggest challenges that clients typically come to you with respect to their equity comp?
I would say, yeah, I would agree with you on not understanding the magnitude and the complexity and the strategy. Another is not understanding the liquidity factor and the concentration risk. So that's what I spend time with my clients on the planning side with is we're going to look at your net worth. We're going to look at your percentage of cash relative to your net worth and your percentage of your current and potential percentage of your equity compensation relative to your old net worth. How much of your net worth, your wealth, are you comfortable riding along with where your current paycheck is coming from? Like that can be pretty risky as that percentage starts to climb. So really tapping into the emotions of that highly variable, because everybody thinks the stock's going to go up. Of course it's going to go up. Why wouldn't it go up? I'm doing a good job in the company I work for. So wanting to find that line between, I don't want to be doomsday about this, but I don't want you to be decimated from having taken this job and having taken advantage of this equity comp. So yeah, a lot of emotions that go along. People seem to think that money is so emotionless and bland and amoral. And no, Dan, you and I are in roles. We are some of the few people that know the amount of money that our clients make and the amount that they have. They don't share that with anybody else.
Right.
They don't tell their doctor. They don't tell their siblings. No, it's their financial advisor and their tax preparer, tax planner. And so it's a very trusted role. And it's one that I take with a very measured tone of like, the weight of that.
There's a lot of weight in it. I completely agree. I love it. I love the magnitude of it because it means that we can really impact and help people's lives. But there is a great weight to it, and I don't take that lightly either. So I'm glad you mentioned that. Let's talk a little bit about the diversification, because what I always tell folks when you're talking about equity comp is you're now being compensated by your employer who's giving you a paycheck, right? Every client that I work with gets a paycheck from that company, and then they likely get some form of additional compensation via company stock. So now you're just by nature overweight in that company. If you were just building a portfolio and you looked at your income as one piece of the portfolio, you would likely want to diversify the rest of your investments away from that portfolio. And again, we're not going to get into individual situations for the context of this call, but we need to we away from the company oftentimes, but we need to do it in a tax efficient manner. And those two don't always go hand in hand. So talk to us a little bit about how you see that sort of objective of, I want to diversify away, but I want to do it in a tax efficient manner, because a lot of times they conflict.
Yeah. There are, it's a very important need. first and
Right.
foremost. You touched on it so well. Your continuing income, your continuing paycheck is dependent on this company doing well. The value of those shares, either as unexercised options or as owned shares, is dependent on the company doing well. And that's all on one company. And so yeah, the tax efficient piece that I see is really I walk clients through. So your current net worth, you've got this much percentage in company stock, and all your if it's a single person, all of their income. If it's a married couple, maybe it's half, but maybe it's 70% if they're the higher wage earner.
Right.
And so the question I start with is, can you sleep at night with that? The right percentage that you should hold is the number that will let you sleep at night. No amount of wealth is worth sacrificing your sleep and your peace of mind. So then when we identify kind of where that is for them to sit, we look at multiple scenarios of how we could sell, how we could diversify these options. And so some of the options are sell to cover, so that as they exercise shares, they're not cash out for them. They sell some of those shares right away. It's not the most tax efficient, but it's cash preserving. Another is looking at the RSUs. The RSUs are taxed at their fair value, so you can sell those right away. A lot of people think, oh, I need to wait until I get long-term. No, for RSUs, you do not need to wait for a
All right,
long-term
so
capital
Karl,
gain.
let's make that clear to the audience, because I see this
Oh
come
my
up
gosh.
so often. So I want you to set the record straight when it comes to RSUs. So for the record, for those that are listening on, we're talking about restricted stock units, right? RSUs typically awarded by public companies, right? They can be awarded by private companies as well, but you see them pretty often with public companies. So let's take it. We've got a corporate leader at a public enterprise, and they're getting restricted stock units. I want you to explain sort of how the taxation works when those units are vested, and then what happens on the growth.
Absolutely. So yeah, when you receive those units, you're going to get a pay stub. You're going to get an additional pay stub. So you got paid your salary, Dan, but that payday where the RSUs hit, you get 2 pay stubs. You
It's a
get one for
bonus.
your
It's
salary.
essentially a bonus.
It's a bonus. The interesting thing about that is that pay stub has net 0 on the bottom of it. The reason for that pay stub is because we are taking the value of those RSUs, the value you could sell and get just about that value, plus or minus some stock fluctuations in price, and in like the minutes or days till you sell. And we're taking that value, the paycheck puts it on your W-2, is just added to your W-2 at its full value. There's no tax complexity with waiting. There's not an axe floating over your head going to drop some additional tax if you sell now versus sell later.
Right.
And so if you need to tax smart diversify, that is the first place to start, because that reduces your equity comp percentage of your net worth and increases your cash percentage of your net worth. And then you take that cash, and if you don't need that cash liquid, depending on what your needs and your goals and your concerns and your risks are, then we invest that either in taxable brokerage, or we put that into your retirement accounts or into other assets, rental properties, paying down your mortgage, whatever your goals are.
100%. We really like, and what we've been doing a lot more of. I'm curious if you've had much exposure to this, Karl. I actually had a gentleman at a software platform who specializes in this on the podcast recently. We like using 10b5-1 plans for public companies, because what that'll do is it'll automatically sell those RSUs with a schedule. And if you're high enough ranking at the company, you might have blackout periods in which you can't sell the stock. But if you set up the 10b5-1 plan ahead of time, you're now telling the organization and the marketplace that you're doing this in an automated fashion at a time when you don't have the material non-public information, even though the sales may happen during that blackout period.
Because you predetermined it. I think that's brilliant. That's a fantastic tool. Yeah.
Yeah. So
because you never know
we're
what's
seeing
going
a
to
lot
happen
more of
between
that.
that grant.
Go ahead, say that
Yeah.
again.
You never know what's going to happen between receiving those shares and entering or exiting a blackout window to where you could sell. Yeah, if the company vastly under or overperforms, yeah, the stock price could be drastically different when you're finally allowed to be able to sell them. So I love the idea of just my intent. I'm not trying to use any insider information, but I want to diversify. I want to reduce my equity concentration. And I'm not saying anything about my faith in the company. It's just for my personal financial situation, I don't want or need this much all tied up in one company.
Right. And what we typically see our clients doing at that point in time is taking that and just investing in other options. Like you mentioned, it might be in real estate. It might be in a well-diversified public portfolio. It might be private markets, right? Be private equity, right? So now you work for a big public company or a little public company, doesn't really matter, but most of them are pretty big. And now you're going to diversify and you're going to get some exposure to private markets, which I think is a really intriguing opportunity. All right. So we hit that on the public side, and that's typically dealing with RSUs. We could go into ESPPs as well, but now let's shift gears a little bit and talk about the private companies, because there's a little bit more optionality. There's a little bit more technicality to that. How much do you work with individuals at private companies? And I'm specifically thinking about options, and what's generally your process for helping folks to make decisions with respect to options that they have with their organization?
Yeah, I do have a number of clients with still privately held companies that either they're actively talking about an IPO,
Yep.
or there is nothing that my client knows about a potential for IPO. And so they just have to assume that this is going to stay privately held for the foreseeable future. So yeah, ISOs are much more common in that space. And so what we really see is further lack of liquidity in those, because you can't sell those. If you've got equity comp in Google, you can go sell those shares as long as you're not in a blackout window. But for a privately held company, then to be a seller, you have to have a buyer. And so what we really watch for is we watch for tender offers. And so this is where the company wants to buy back a portion of their shares for their own goals and to give liquidity to their employees. And so we're always watching for those. I'm telling clients, set a planning appointment. As soon as you have the details on that, as soon as you have the 409A price, what it's worth in terms of the internal valuation and the tender offer price, because those are different numbers.
Right.
The 409A price impacts alternative minimum tax, and that's, with ISOs. And so there's a lot of complexity into getting the shares, but then the tender offer is selling those shares. And so that sell price. So there's a lot of strategy that we're running. Again, looking at that equity concentration and seeing, okay, one could argue there's more risk in a privately held company equity comp. One could argue that there's less. It's all a tool. Money is a tool to hopefully to work to accomplish your goals. And you and I sit in that privileged position of being able to give some expert advice, because we do this all day long with several clients, and we've seen so many scenarios play out where the price goes south or the price skyrockets. I've had one guy who became a millionaire overnight when his private company IPO'd. He had exercised some NQSOs right before the IPO. Boom. All of a sudden, his net worth went from low 6 figures to low 7 figures. It was mind blowing. And so then it's our goal to help him manage and steward that wealth wisely, and then help work to diversify it tax efficiently over
Right,
time.
because at that point in time, it's a great thing to happen, but you're faced with a pretty big tax liability at that point in time. So a lot of planning effort, I know, is required. I'm sure those were busy times for you.
Yes.
Very cool. All right, so given that you're a tax expert, we just had a new tax bill that was passed. So I'd love to get your take on the big beautiful bill, if you will, and maybe how folks should be. Let's talk about business leaders, whether they work for private or public companies. How should they think about the big beautiful bill impacting the future of their equity compensation? And are there anything that you're thinking about to help your clients to strategically position them for the future, given the new tax code?
I'm going to ask if we can come back to that one. That one, I want to mull on that one a little bit more, because there wasn't a ton that was specifically covered relative to equity comp. And so let me mull on that one. Let's come back to that one.
Yeah, that sounds good. I agree. There's not a ton there. There's some other aspects of it that are important, right? But there's not a ton relative to equity comp. All right, so I want you to help folks to think about, if equity is a piece of their compensation package, what are like the core decisions that they need to make You're the tax expert. You're going to do all the planning work. You're going to run the numbers. You're going to manage the spreadsheets. What are the things that they need to think about relative to their overall wealth and their overall life so that someone like you can do what you do best?
That's a great question. I think the first piece is making sure that they have access to and can capture all of their relevant financial information.
Okay.
And so I find that a very common difficulty is for them to actually gather all of their tax forms. The three biggest ones are their 3921s forms for exercised ISOs,
Right.
their 3922 forms for ESPP shares,
Yep.
and something called a stock option supplement plan, a stock plan supplement document that is those basis adjustments that needs to go along with the 1099 if they sell any shares during the year.
And for folks that are listening right now are saying, I don't know where to get those, give them some advice.
So, and I've actually seen this a few different places. I've seen, because I've asked clients, because I want them to educate me, because I have never been in a job where I've received equity compensation.
Right.
And so I asked them to educate me about where they get these forms. And I've heard different answers. And so the two places that taxpayers should be looking for these are the brokerage account and their employee portal. So look for any documents in your employee portal along with that W-2. I would also say, while you're in that employee portal, I want your latest or year-end pay stub. I like to say about 1% of a year of W-2s I see are wrong. And
Okay.
how do we prove that? The pay stubs. And so, not related to equity comp, but the most drastic one that I experienced was a client moved from the Midwest to California and got a relocation bonus. The employer doubled the value of it. He didn't pay it out twice, but they doubled the value of it in his W-2. It would have cost him 15 grand more in taxes.
Okay.
And so if not for me pushing him, like, go back to your employee portal, get me that year-end pay stub. This doesn't look right from the planning that we did a few months ago. The pay stub is how we prove it.
Got it. Well said. Well said.
And then on the brokerage side, don't just look in the statements and documents. Look all over. I have heard from clients that stock plan supplement document or those other ancillary forms, for whatever reason, are not in the tax statements and documents. I've heard it was in a different place. I need clients to be curious and to go look. They can't outsource that job to me because I can't have their logins.
Right.
And so I need clients to partner with me. Like, I'm not going to make them DIY anything more than they have to, but the document collection, we have to go get that. And so those are the two biggest places, your brokerage account, and your employee portal. Another value add that I like to add for my clients is I have them sign a tax information authorization form. This gets me read-only access to their tax accounts. And so, but that takes time for the IRS to populate. So that is not a 100% safety net. That lets me go see whatever the IRS has published on their tax record. And then if I see anything that they haven't provided, then I can go ask them, okay, I need you to go look for this form. I need you to go look for that form. Like, that wasn't in the uploads that you gave me. And so I'm trying to watch their six as much as we can. So
yeah, that seems like a valuable service that you provide, but I agree with you. You got to get, whether it's your financial planner, your wealth manager, your tax preparer, you got to get them those forms. Doing that in a time efficient manner, I'll always emphasize that. The quicker you can get it, the more your team can go to work for you. So that's well said and good advice, Karl. All right, so we're going to shift gears a little bit. Now we're going to get to know you a little bit better. All right, so you are, Karl, officially entering the lightning round. We never tell our guests about this, but all we want you to do is just give me the first thought that comes to your mind. Could be a one-word answer, could be a drawn-out thought, whatever makes sense to you.
All right, let's go.
All right, we'll start with an easy one. Coffee or tea?
Coffee all day, every day.
All right. Sounds good. All right. So he's rocking and rolling. He's got his Joe with him now. All right. One meal for the rest of your life. What is it?
That's a hard one because I love variety.
Okay.
And my wife is a fantastic cook. A childhood favorite I had was stuffed shells or ricotta cheese inside pasta. And that has a warm spot in my memory. So, okay, if I've got to do something, yeah.
That makes sense. All right. What's one tool or technology, so it could be hardware or software, other than your phone or your computer that you can't live without?
I'm going to, professionally, I'm going to say Loom.
Okay.
the
Love
video
Loom.
recording
Love Loom.
software.
Yep. Big Loom fan.
Yeah, I make videos for my clients. I make videos for my admin. She makes videos for me. And that as an asynchronous communication tool, that's a core value in our firm. We don't have set work hours. We each have young children. And so we work when it fits for life and we know the deadlines to get done. And so I couldn't work without something without Loom.
I love Loom. Loom is great for, you can use it for marketing stuff. You can use it for internal communication, external communication. It saves you a lot of meetings. So highly, super, super easy to use. Do you have a favorite quote or phrase about money or success?
Abundance, not scarcity. Like
I
that,
love
that mindset has driven my career, my investing, how I treat other people, how I treat my clients, and that attitude, abundance, not scarcity. I believe it'll change your life.
Love it, man. That's well said. That's a really, really good theme. Do you have a personal hack that you can share with the audience?
I think the one that comes to mind right now is more on the personal side.
That's fine.
It's put your shoes on and don't sit down. Like as a parent of young kids, like if I want to clean house, if I want to get stuff done, I need to put my shoes on and I need to not sit down. And you just keep on going and you can just keep blitzing through stuff and you'll get it done. So yeah.
Love it. Love it.
Parenting, I would say read to your kids. I read a ton of books to my kids. And I love snuggling with them, and I'm gonna treasure these moments of reading stories to my kids. Read
Love
to your kids.
You can't overestimate how much reading to your kids. There's a lot of value in that. Do you have a favorite book on finance or business?
There are a lot of good ones. The one that comes to mind right now is I think it was values-based financial planning.
Yep.
I actually was assigned that one for a course when I have a seminary degree along with my accounting degree.
Okay.
And part of that was taking some finance-based classes. And I was reading that at the time that I started dating and proposed to my now wife. And the tools in that book of identifying, the ordering of your financial goals and the why of your money, that was a really helpful resource for us as far as setting our financial goals and trajectory for our marriage. And so I really liked that one. But there are a lot of amazing ones out there.
There are, but I think the concept that you just hit on, even if folks don't read the actual book, the why behind your money is such an important concept, right? Use your money. I always say, our slogan here at Taylor Wealth is we help you to live your version of a rich life. Well, you need to prioritize what that is and what you want your money to do for you. And everybody's why is very, very different, but make sure that your financial plan is aligned with your why. And I think that's such a powerful concept. All right. What is one bucket list item you've already accomplished?
Running a marathon.
Okay. Where'd you do a marathon?
So I've done 2. I did, and they've both been here in Fresno, where I live. And so we have a few annual races each year.
The New York City, actually, a day before my son was born. So we share that same bucket list milestone, I guess. And lastly, Karl, if you could give one piece of advice to your younger self, what would it be?
Well, I feel like I lived this well, but deferred gratification.
Very cool.
And
Very cool.
Yeah,
Very cool.
that, there are still some places I could have done better at that, but I look back and I attribute that to a lot of the place of where I've gotten in my life today. And so I think I'd want to emphasize that even more.
Awesome. Well said, man. And then if our listeners want to connect with you, collaborate, work with you, what's the best way for them to find you and reach out?
Best place is my website, strubecpa.com. That's STRUBE-CPA.com. I work with clients all over the country. So if you don't want to DIY your stock options and taxes, planning and/or prep, I would be happy to be a resource for you.
Very cool. Well said, man. So for those out there that are looking for some help with the taxation of their equity comp, Karl's a great guy to reach out to, strubecpa.com. Karl, thanks for joining us. I really enjoyed the conversation. Appreciate you being on.
Thank you, Dan.
All right. And that is it for the episode. As always, you can find our podcast along with our newsletter and our YouTube channel, all for free at makingsenseofyourmoney.com. And as always, prioritize your version of a rich life.